Does investing in companies that are conscious about the environment result in higher returns for your portfolio? I'm joined now by Lloyd Kurtz, the head of social impact investing at Wells Fargo Private Bank. So Lloyd, is that the case? Do sustainable companies beat the market?
Some do. There's good academic evidence that environmental policies can be good. Harder to prove in practice because so many other factors are involved. Valuation, the quality of the manager. Ultimately, money managers who are smart and good can leverage some of those factors and use that to get an advantage. And other money managers that aren't aware of those studies and aren't aware of those factors won't do as well.
And before we go any further, why don't you define socially responsible investing for us?
Well, part of the Wells Fargo offering is that there are a lot of different definitions depending on who you are, but sustainable investing is really one of the important threads driven not just in the US, but by institutional investors out of Europe, focused on carbon, focused on climate change. Ton of studies on what happens to the risk dimensions of your portfolio when you put a climate overlay on it. So it has moved from just excluding things you don't like to looking at every single asset you own, and not just the environment, but how do they treat customers, how do they treat employees, how do they treat shareholders with their corporate governance practices.
So companies that are really looking out for their stakeholders, unpack that a little bit more for us.
Yeah, if you think about it, what you really want in any company is efficiency. You want a company that's capital efficient. Higher return on equity, all else equal, should be good. And to get that, cutting a good deal with your employees, cutting them in on the success of the company, cutting a good deal with your customers, cutting a good deal with your suppliers, you're going to have better capital efficiency and potentially better fundamental outcomes.
And are there certain sectors you want to be in?
Yeah, I think the social parameters typically push you out of utilities, which have heavy environmental footprint, obviously, toward knowledge sectors like technology, healthcare to some degree, and towards sectors that are super consumer responsive, like the consumer discretionary sector. Those sectors are also heavy cash flow generators, and at the moment, quite a few companies are appealing on valuation in those sectors. So I think lots of opportunity. The other thing that the social policies will do is they'll push you into companies that have a better competitive position. We're doing work now, you've heard of Warren Buffett's concept of the wide moat. And Morningstar, the institutional group there, assigns a moat rating. We found socially responsible companies are a lot more likely to have a wide moat than non-responsible companies. And that goes in with taking care of your stakeholders and all the people that are involved with your business.
And in socially responsible investing, the same principles apply, right? Diversification, things like that.
It's not a parallel universe. If you don't diversify, you're going to get the consequences of not diversifying. If you buy a high valuation stock with bad fundamentals, you're going to have a bad experience, just the same as in any other kind of investing.
But in your research, have you found that socially responsible investing helps to hedge against certain risks that are across the markets, like volatility, political events, things like that?
Yeah, it's really interesting. One obvious example is energy, where sustainable investors, there was a whole movement to avoid fossil fuel stocks. And part of the one byproduct of that is over the past 24 months, as oil stocks crashed, those investors were not exposed to that. So I wouldn't call it hedging as much as maybe fortuitous, but there's definitely been an advantage at times to some of the sector decisions that social investors have made.
And of course, you can be buying individual stocks or going into funds that have companies that are socially responsible.
That's right, and tremendous diversity. There's mutual funds, and at Wells we have literally 8 different targeted strategies within the private bank that can serve a client's specific needs.
All right, Lloyd Kurtz from Wells Fargo, thank you for coming by. We appreciate it.
Thanks a lot.
I'm Scott Gamm, and you're watching The Street.